prices are expensive for the stock market. And so I would tend to say that while the long-term trajectory is still higher, in the near term, we probably could see a lot more volatility.
Well, for more, let's bring in veteran tech analyst Daniel Ives. He's the managing director of Wedbush Securities in New York. Welcome to the program, Daniel. Now, as we saw there, record profits for both Tesla and Apple. But despite those bumper earnings, we did see their share price take a bit of a hit. Why weren't investors as thrilled with them as we thought they might be?
Yeah, I think just a bit of a knee-jerk reaction post a parabolic run that we've seen. But I mean, if you look at Apple in particular, I mean, I call it almost a Cinderella story in terms of the types of robust numbers we're seeing. A $5 billion beat on iPhone. The super cycle, the hype was there. The reality is meeting expectations. And Tesla in the EV market is still a golden age, 3% penetrated. I still think these stocks go much higher. I think 6 to 9 months from now, we're looking at a $3 trillion market cap for Apple.
That's incredible. I mean, we did see Apple surpass the 2 trillion mark just last August, so it's not really outside the realm of possibility, isn't it? But can I ask you more about Apple? Because the iPhone is still the company's biggest moneymaker, accounting for nearly 59% of the company's revenue during the holiday quarter. Its flagship smartphone really has been its biggest earner for many years now. For how much longer will this continue, do you think?
Yeah, and if you go back years ago, the skeptics would say that most of the growth is in the rearview mirror. And look what we're seeing this quarter with China at 57%. I think it just shows that unparalleled install base. Right now, 40% of the install base is in a window of an upgrade opportunity. So you're seeing a massive renaissance of growth within Apple on the iPhone. And the reason we call it a super cycle, we view this as an 18 to 24-month cycle globally. And a key part of that is China. That continues to be a key part of the growth story and bull thesis in Apple. Even though services is a key part of the re-rating, we think services alone is worth $1.2 trillion.
Let's look at Tesla now, because that's a different kettle of fish. Its latest results mean the company enjoyed its first full year of profit. Do you expect that to continue?
I think ratings in the rearview mirror. They're going to continue to be profitable. We saw that with S&P 500 inclusion. I think going forward, more profitability also coming from China. I think that's about 20, 25% more profitable per vehicle. And I think when you look at Tesla right now in the EV market, it's Tesla's world and everyone else is paying rent.
That's right. And we know Tesla's share price has soared 700% in 2020. It's now the world's most valuable car maker. But do you really think it deserves that title, given that it really only sells a fraction of the amount of vehicles as the other traditional car makers do?
Yeah, it's a great question, but I view, and I always have viewed Tesla as not an auto company, as a disruptive technology player. And I think that multiple it gets is more what you're seeing across EV players, NIO, XPeng, and others in China. And that's why I think you're going to start to see some of these re-ratings in traditional auto companies like a GM as they go into EVs. But if you look at Tesla today, you're going into a golden age of EV, 3% penetrated today. And I think what you're seeing right now, they could be doing 1 million vehicles potentially in the next 2 years. I believe this stock continues to go higher. Our bull case is $12.50 on the shares.
And what about Facebook? We know its earnings beat expectations, but it has become a bit of a target from both US policymakers and users. I'm thinking of the furor over WhatsApp recently. Do you expect Facebook to have a good year this year? Can they overcome those potential hurdles in terms of privacy concerns?
Yeah, I think, look, right now from a regulatory, that's a headwind not just in the US, but in China. Facebook's front and center. I do believe the advertising demand continues to come back. That's what the street's focused on. But you look at Apple and Facebook starting to go a little head to head in terms of some of that rivalry. And that's a headwind for Facebook. But we still believe tech stocks are up another 25% this year, led by FANG names.
Okay, let's see what happens. Daniel Ives in New York, thank you again for joining us.
Thank you.